morning, everybody. Welcome to day 2 of the panels. The focus of today's event is to grab the brains of our panelists and to really ask them and understand what they're doing in Asia, what the challenges in this region are, and how much is being exported from Asia to the West, how much is getting exported from West to the East. So starting with Sophie, if you can just, everybody can introduce themselves and say a little bit also about what you're doing in Asia.
Sure. So I run a business called Sophie Grace, which does compliance and legal services primarily for Australian firms or firms looking to enter Australia. So we're seeing a lot of Asian brokers looking to establish and get licensed in Australia amongst other global firms looking to get a presence in Australia so they can use it for marketing. And I also have a traction fintech business which does trade reporting under the new ASIC regulations.
My name is Francis. I'm from ADS Securities, and our headquarters is from Abu Dhabi, and we have regional office in Hong Kong and Singapore. We do everything from FX trading, multi-asset, and global markets to like project financing, a lot of things under the securities brand. And our main market is around the region. We have clients all the way from Japan all the way to the Southeast Asia. And mostly half and half retail clients, the other half is institutional clients.
My name is Shane Braunstein. I'm the Managing Director for Asia Pacific for Gain Capital. Gain Capital is a global leader in online trading. And our largest business globally is retail derivatives trading. Our Asian businesses contribute about 40% of our global retail volume. That is from Asia Pacific more broadly. We operate out of offices in regulated entities in Tokyo, Hong Kong, Singapore, and Sydney, and we also have representative offices in Beijing and Shanghai.
My name is Rajesh Yohanan. I run Oanda for Asia. We've got offices in Singapore, Sydney, Tokyo, where we are also regulated, but we also have 2 small offices in Hong Kong and in Shanghai. A bit like what Shane mentioned, about 50 to 60% of the global volumes for Oanda come out of Asia. And we generally see a rather secular trend towards more and more of Asia contributing to our global volumes.
I'm Arthur Lay, founder and co-CEO of Juna Markets. We're an Asia-based broker established early last year with a focus of clients exclusively in the region. Primarily retail with a focus on partnerships, IBs, and money managers.
And my name is Adam Reynolds. I'm the CEO for Saxo Bank Group in Asia Pacific. We're a Danish bank. But in Asia, we have regulated entities in Hong Kong, Singapore, Sydney, and Japan, as well as a new free trade zone office that we opened recently in Shanghai to pursue our interests in China.
Thank you very much. So let's start with current events. We have a small little country that we're on their island, and they have a tiny little stock exchange that went up 2.5 times and created trillions of dollars, trillions of many currencies of wealth, and then it started to fall down. And depending on your way of looking at things, that was either positive or negative, but it definitely had a global impact. So I just want to ask the panelists and get your feedback of now with things changing a little bit in China for the past, from really 2004, we've heard lots of you have to be in China, you have to be in China. It's a strong growth happening there, and now we're seeing it slow down a little bit. So I just want to understand, maybe starting with you, Adam, how is that impacting your focus on China? Are you taking a different turn and saying maybe it's not worth spending the time there if it's a slowing economy and there's wealth kind of being changed?
Yeah, I mean, it's a good question, Ron, thank you. But I think that there's been quite a history of boom and bust in China. And if you go back over the last 15 years, we've had a property bubble that's burst, we've had a credit bubble that's burst, a commodities bubble that's burst, and now an equities bubble that's burst. And the reason that all of these bubbles exist really is because the wealth in China that is being generated is crowded into the markets in China and doesn't have an outlet for geographical diversification and into other parts of the world. So I believe that this is recognised by the authorities, which is why they're looking to open the capital account and open it further, but that's obviously a slow process. But for us, we think that that capital account opening will continue. We're very encouraged by what has been announced over the last 12 to 18 months with respect to the free trade zone, which is why we opened our office in the free trade zone, because we think that diversification for investors is key to stopping the boom and bust cycle that's been going on in China for the last 15 years. So we're very, very positive and remain very positive regardless of what's happening to the domestic markets.
So the bottom line is you have more of a long-term approach that things are going. It's the place to be, regardless of what's happening in the present.
Absolutely, and for us, it's a place to be with regard to diversification into international equities and international listed products, as well as derivatives.
And Shane, what are you seeing from Gain Capital?
Well, I think we share that perspective that this is we share the long-term view here that China's capital account needs to open up in order for them to float the currency, which they've declared an intention to do. So, I think the progress has been halting. It's been rough at times, and there will continue to be sort of this very gradual process of reform and opening up that will continue, and we anticipate that Chinese investors will ultimately benefit from the ability to invest in international asset classes.
Rajesh, is that?
No, I don't think so. Anybody thought it's going to be a smooth ride. Rather ironically, we've not seen a dramatic drop-off in either volumes or client growth because of any of these economic restructuring that has happened over the last decade or so. Even right now, while we're talking about a soft landing for the Chinese economy, as far as our Chinese volumes and client growth is concerned, that's not really affected us, and that could be partly got to do with the strategy that we have and the clients that we try to access. That may not necessarily be true for everybody. And I share what both Adam and Shane mentioned. I mean, this is a long-term play, and we have to be here for a significant amount of time for any material benefit to actually follow.
Arthur, since you're more newer in the your broker is a little newer than some of the other established companies here. So you're more arriving into this boom and bust cycle that really happened in the past year. How is it affecting your business and your look on the region?
Well, in terms of how it affects us, we're still in a high growth stage, so we haven't seen a material impact. But I think when you look at China and everything that's being said right now in the news, you're seeing, I think there's a misconception that people are throwing around words like, recession or potential recession, but it's really just a slowdown, and it's primarily driven by a sell-off in equity markets. Fundamentally, China is just transitioning now from an industrial and export-driven economy to now more service-based and consumer-driven economy. You have, yes, GDP has been the lowest since the 90s, but we see this still as a long-term play, just like everybody else. I mean, we're focused specifically in Asia, and we don't, our long-term outlook is still very positive for the region.
Okay. So based on that, we have this fact that China is growing. It seems to be regardless of what's going on in the equity markets. So I want to get Sophie on your thoughts, and what are you seeing as far as Chinese companies that they're trying to do things looking out of China? Is there interest in companies looking to expand, like Chinese brokers looking to expand to the international markets, especially with what's going on domestically?
Yeah, I mean, I get probably at least 3 or 4 phone calls a week from some Chinese-based organization looking to be licensed outside of China. They want top-tier licensing. They seem to be quite set on that in the sense that their clients understand that the best brokers are licensed in various places, the UK, Australia, second tier might be New Zealand. They all want to have this. And I think finance magnates and other publications are quite active in showing that there's people faking websites, faking licenses. They'll use any license that they can get their hands on. So we're definitely seeing a really active market for people wanting to be regulated outside of China, which they can use for marketing purposes within China. I think as everyone here would be aware, there's no formal licensing process in China yet.
So you have, just to understand, you have Chinese companies that are trying to get license out of China, such as the UK and Australia, in order to remarket back in their countries.
That's right. That's the common theme. I haven't seen any real aberration from that. It's, I think what they are facing is that their clients are pushing them to be licensed in an appropriate place. Their clients know that you need to have an AFSL, or you need to have an FCA number, or you need to have a New Zealand number. They're not so keen on the lower end jurisdictions at this point, and they want the status. It helps them with their marketing, helps them build their business.
And Francis, with ADS, your institutional clients, what are you seeing from China as far as the demands and the interest from them?
I think the market changed so fast. I mean, look at this event. A few years ago, the only company from UK, from US joined this kind of event in Hong Kong. But nowadays, a lot of Chinese companies coming to join this event. And even the technology providers from China, they set up the office in Shanghai and Beijing and try to get the local clients, like Sophie said. There's a lot of local companies, FX company, trying to get a license in London, in New Zealand, in Australia, as market back to China. And now we also see the company market China. They go to, it's a Chinese company, operated by Chinese, get Australia license, and the market in Hong Kong and the market in any other place. I mean, a few years ago, in China, we only have a competitor like Gen, Saxo, and nothing else, and FXCM, of course. But now we see more competitors that we don't know the name, and we don't even know who is running the companies. So it's unofficial count, there's over 1,000 FX company doing business in China with license or without license. Actually, it's no license there. That's why China become the most competitive market in the world. In Hong Kong, you can operate a business without a license, but in China, everybody doing crazy things. If you join the expo like this in China, in Shanghai, you'll see mermaids, showgirls, Russians, everyone, like doing crazy events in Shanghai. I mean, everybody have the experience going to Shanghai event and see all the crazy stuff. It's like computer show, but it's FX show. It's B2B FX technology providers. So, I mean, the market is definitely expanding, and we see, long time ago, we see retail clients flow only from China, but now it's more institutional clients want to get an API, want to get the price. And that's why I think ADS start to provide this kind of technology. Instead of just looking at the retail clients only, we also provided institutional technology to the people, vendors we have.
So you mentioned that there's all this crazy stuff going on in China with the retail market. In addition to that, over the past 12 months, there's also been quite a few exposés on TV showing how there were brokers were scamming clients, and there were pictures, images of clients storming branches and ripping down pretty much everything in the offices. I'm just wondering if that type of headline risk, is there awareness growing in China that FX is a risk, the margin trading is a risky product, and there are dangers and scam companies that are growing in the market? So maybe start with you, Adam.
Yeah, I mean, I think that in any unregulated market, there's always a tendency for people to try and set up and fleece clients of their money, which is why being regulated is or being involved with a regulated broker is what a lot of clients look for. But FX is definitely a risky product. But if you've been trading the A shares in China, that's a kind of risky product as well, especially if you've been trading that on margin over the last 18 months. There's financial risks in all of the products we trade. I mean, the US 10-year Treasury had a 5 standard deviation move in December. That's one of the safest markets in the world. But if you were trading that market at that time, it was a pretty scary ride. So all of the markets have their moments where they're wild and volatile and difficult to trade. the more leverage you have, the more risk you have exposed to that. And there's always going to be unscrupulous people out there who are unregulated and will try and take advantage of customers. But you know, for most clients, that's why they seek out regulation, and will always do so.
Rajesh, what are you seeing from your partners there? And
I think you know, we as the FX industry cannot really be in a situation where we are looking for sympathy for some of these actions. Some of the criticism and some of the reaction that from the clients that we're seeing are deserved.
are deserved, you think?
Yeah, but large parts of the FX industry are slightly, you know, are slightly doubtful in the way they operate and the way they deal with their clients. So, but at the same time, this is an industry that's been around only for about 25 years. And if you look at the early days of banking, you know, they were thought to be rugs themselves. And, you know, I'm not saying banking has completely cleaned itself up, but it's a very, very young industry. And, you know, regulators themselves have not really understood how to regulate this industry. Many regulators around the world have not really got their arms around what are the functioning of this industry. So it's a very, very young industry. And some of the reactions that we are seeing is a result of everyone just trying to come to grips with where it is and how to run with this industry.
Yeah, I would concur. I think it's early days. My analogy is sometimes the equity markets in the 1920s when you had scammers of all varieties entering, notwithstanding the mermaids and the Russians. But what we've seen actually in the last year, especially since the Swiss shock, is we've seen what I would call a flight to quality from a regulatory standpoint, which I think has fueled some of Sophie's business, that there's real demand for credible regulation and for supervision from the likes of the FCA, from the likes of ASIC, such that in particular that clients can be sure their principal will is safe and well protected. So we've Gain Capital has stood to benefit from that in this region, but I expect that trend will continue as people become more and more aware, not just of the market risk that they can take, but also of the counterparty credit risk that they're taking on their broker.
You mentioned regulation and how it's starting to kind of creep up a little bit more, for on the client side, but also on the regulatory side. The regulators are taking a deeper look on the Forex market. We know in Korea and Japan, the regulators have put in very strong limitations on the use of margin. Just want to get everybody's opinion on where do you see that taking place, if that's something that's also going to be taking place in other areas of Asia. Me starting with you, Sophie.
It's something that gets talked about a lot in terms of whether ASIC's going to put something in, and people talk about rumors, but I can't see that the margin will be capped anytime soon. There's some kinks in the Corporations Act which would make it quite difficult. The biggest thing that people are looking at the moment in Australia is changes to the use of client money. So there's lots of local discussion about that point, which we'll see what happens. I think it's probably a foregone conclusion now that it won't be able to be used. So in other countries, New Zealand, I can't see that there's going to be any caps on margin anytime soon.
Francis?
I will categorize two different categories in Asia. There's a regulated place and the unregulated place. The regulated place, we talk about Hong Kong, Singapore, Australia, this place. But actually, a lot of companies operate in Hong Kong like us. We have a Hong Kong office. But actually, if you ask everybody, where is the market? It's definitely not Hong Kong. It's because it's a regulated place and it's very competitive. So many companies here trying to get a very limited client base in Hong Kong. There's only 6 million people here. So how many clients you can get from under this license? It's very difficult. So the license just gives you reputation. Like when you go to China, you say you have a Hong Kong license, you have an Australian license, you have a lot of license. So in China, actually, everybody is count how many license you have. The more license you have, the most trust you have. So it's getting like a money games. If you are rich, you get so many license, means you are more regulated. Your money is more safe. So that's probably the only things I have under this topic. But in terms of how many clients you can get from Hong Kong, Singapore, I think it's very limited.
Do you see any of the regulators in the region becoming more strict on compliance and margin?
I don't think Hong Kong will do anything because it's really that doesn't create. If as long as no one create troubles for the SFC, I don't think they will do anything on that.
Okay, and Shane, what do you think?
You know, I think the one to watch, really, from my perspective, is ASIC, because there have been so many Chinese firms, going that direction. I think that's one that we're keeping our eyes on. I do think because of the Corporations Act and the way that the law is structured there, that it's unlikely there's going to be a change in the near term. But to me, that's the one to watch. I think MAS has already taken action in Singapore, and Hong Kong, the SFC has already put pretty tight limits. Has put in 5% margin requirement for FX pairs. So we're not anticipating more movement in those spheres.
Rajesh?
I agree. ASIC is perhaps one where you're likely to see something. But, interestingly, we actually went back and looked at what happened when the margins were changed in Japan by JFSA. And it's fair to say that the volumes today are higher than what they were 5-6 years ago. And that's partly got to do with the fact that you get more clients in, different types of models are created, more asset classes. And so if you are in it for the long term, then all somebody is doing from a regulatory perspective is just setting a new set of rules. And if you follow the set of rules, it's equal for everybody, as long as you're a regulated entity. So it's a temporary blip, and we've even seen it in NFA. It's a temporary blip as soon as the announcement happens or it becomes operational, and then it swings back again. So it's
But we see in the U.S. and Korea that the regulators have more or less kind of like
so Korea is a bit more
strangulated
extreme. Korea is a bit more extreme. The U.S. is, U.S. has not just been about margin. They've stopped commodities trading. They've stopped. There's no CFDs. They've clamped down on funding. So it's not just pure margin in the U.S. And so it's difficult to compare. But if you look at what happened in Japan, volumes have actually grown. Retail volumes have actually grown.
Well, I think the JFSA is an interesting one, actually, because there's a loophole right now for corporate account leverage.
Yeah, but even corporate, they're lowering that.
It's pretty clear, it's being telegraphed at this point, that corporate account leverage in Japan will not stay unlimited forever. So right now there are brokers that are offering 400, 500, 1,000 times leverage in Japan for corporate accounts, and I don't see that lasting more than another year or two.
Arthur, what do you think?
Well, I think if you look at the countries with higher capital requirements, or higher margin requirements, like Singapore, Japan, Hong Kong, it's always kind of a struggle between what the clients are asking for and what the regulatory body is asking for. The countries where you're seeing higher margin requirements than 1%, I don't see a huge growth in demand from clients and the focus on brokers. I think 1% margin is pretty standard across the industry, and if you are a country that has a regulator requiring more than that, it kind of makes you a little bit less competitive. So I think brokers right now are focusing on clients in countries that have either no regulation or requiring 1% margin.
Adam, when we spoke earlier, you mentioned that Saxo has had conversations with regulators in China. What's your feedback and what's your forecast on what they're going to do if they do implement some sort of regulation and margin limitations?
Well, we haven't really been discussing that as one of the key things for our China focus. Our China focus is very much more on outbound investment into the international asset markets. And for us, it's all about people having balanced portfolios across the asset classes. But from the point of view of regulators reducing leverage and increasing margin levels, quite frankly, we're all for it. Actually, we'd be quite happy if ASIC brought in some similar regulations that we have in Hong Kong and Japan, because we think it protects clients, and the longer a client survives to make money, the better it is for us from our point of view. We think there's always going to be this unregulated market there, but you know, if there is a regulated market, then clients will tend to move towards it, and that will be the biggest part of a market in their home domestic market if they have the opportunity to do that.
Okay. I noticed between the panelists that some of the larger companies are split on where their headquarters are. It's either Hong Kong or Singapore. But it seems to be that Singapore has been emerging ahead of Tokyo and Hong Kong in the last couple of years as like the central financial hub of Asia. And a couple of you are headquartered there. Your opinion on what's so special about Singapore that it's become this destination for a lot of financial business taking place? Start with you, Rajesh.
I think one is, at least till a few years ago, it used to be cheaper than Tokyo, and maybe it certainly is cheaper than Hong Kong as a place to do business. SFC, perhaps not the right thing to say here in Hong Kong, but SFC tends to be a little bit more, from a regulatory perspective, tends to be a little bit more stringent than MAS is. I've worked with both of them pretty closely, and I can say that for sure. And historically, I think Singapore was treated as some sort of a gateway into Asia, and some of the operations started off in Singapore before they started off in Hong Kong, and that's what it is. But really, if China really starts blossoming, then we can see actually a shift towards Hong Kong becoming the base.
Shane, you wanted to add something?
Sure. I think that Shanghai is going to have something to say about this in the next 5 to 10 years. I think as the capital account opens up, as the free trade zone policies start to become meaningful, hopefully at some point, I think Shanghai will emerge as a financial center onshore in China. I think Singapore, frankly speaking, I don't see long-term as a hub. I think it will remain a hub for asset management purposes and for hedge funds. Singapore, it's interesting. I would characterize the MAS as extremely flexible and permissive when it comes to asset management and starting up a hedge fund, for instance, or receiving money from countries that rank low on the transparency index. They are, very welcoming to and looking to build assets to become the financial center in Asia, and they've done a nice job of it, frankly. But I think from the brokerage industry perspective, I don't expect it to be the long-term home of flows.
Adam?
I guess from our point of view, because we're in Shanghai, we're in Hong Kong, and we're in Singapore, I think that the reason, in my view, historically, Singapore has a strong foreign exchange culture, going back to the days when Bank Negara Malaysia and GIC and MAS were amongst the biggest punters in the world in the FX market. So you've got a huge number of people there who have been in the FX market for a long time, and a big talent pool of people who are FX focused. But as a financial center, you've got to look at the equity markets as well, and Hong Kong totally dominates for the equity markets. So if you're looking at the major banks, a lot of them have their FIC businesses in Singapore and their equity businesses based here in Hong Kong. And I think you've got to be in both centers really if you want to be doing a proper multi-asset offering.
Do you see that split continuing, or
I do,
or do you
because
also believe
I think the strengths of the talent pool of the individuals tends to be more equity focused here and more FIC focused in Singapore, and I think that will stay. I do agree though with Shane, absolutely, that Shanghai will definitely become one of the biggest financial centers in Asia, if not already heading in that direction. But as the capital account opens, more and more of the talent will move into Shanghai, which will make it definitely a contender as the main financial center.
Okay, so we've focused a bit on China. I want to get everybody's opinion on the rest of Asia and Southeast Asia. Like, what type of markets are you seeing the growth taking place that you want to be in, or you're looking to be more active in the next 12 to 24 months? Starting with you, Arthur.
Well, for us, since we're purely Asia focused, you do have China, obviously, which is the kind of the star of Asia and where a lot of the focus has been over the last few years. But we're definitely looking at emerging markets. We're looking at Indonesia, Malaysia, Vietnam, Philippines. The the challenges in some of those countries is, capital controls. You have, certain segments that are, certain clients are, makes it very difficult to take money out of the country. But we're definitely seeing a growth in emerging markets. And that's the focus, that's going to be half of the focus for us outside of China.
And on emerging markets, and you mentioned a couple of them, Malaysia, Vietnam, is the focus when you're talking about the capital controls to set up something locally that you could also hold cash in those countries instead of removing it in order to have client segregation? And
I think that's a big risk for companies. It requires a lot more than just setting up a local company and a bank account. But I think that is going to be dependent on the risk tolerance of the company, of whether or not they want to actually set up something in a country where that has capital controls.
Rajesh, what do you believe?
The hinterland around Singapore, Philippines, Thailand, Indonesia, Malaysia, they're of course interesting markets for us, but I tend to agree with that there are issues with regards to capital controls, there are issues with regards to language. I don't see too many brokers going out and setting up offices or local bank accounts. I think that's a little bit out in the future. But I do think that from a growth perspective, Australia still offers a little bit of runway, Australia and New Zealand, partly because, two English brokers there have been dominant for a long, long time, and I think there is a potential to actually snatch some share in Australia and New Zealand. So I think outside China, I would say the ASEAN region and the Australian continent would be areas of opportunity.
And Francis, what about you?
For us, I think the next big market aside from China will be Taiwan and as well as Malaysia. And if you talk about, can we set a company there? No, the answer is no. There's only, I think, only 5 countries in Asia has a proper FX license regulation, which is Korea, China, Japan, Hong Kong, Singapore, and Australia. Only this place you can allow to set up the FX firms. Other than this place, it's all unregulated. So you have to go, if you want to go to this market, you have to go very carefully, go to this kind of place. But doesn't mean this kind of place doesn't have FX business. I mean, last weekend I was in Malaysia. I visited one of my clients. They have like 50 traders, open the trading rooms. They have trading rooms, and they start getting clients. But they don't have any license. They have just a bunch of computers and a phone and start calling clients. And especially in Malaysia, most of people knows they are good on the multi-selling pyramid. So they do business. They do FX business, but no license, which means the market is potential. There's a potential market in Malaysia with so many participants that we never heard the names. So I think Malaysia will be, if you ask me what's the next big market, I will say Malaysia. And the next one will be Vietnam. And after Vietnam, I really can't see any potential place.
And Sophie, what about you? Are you seeing demand from people outside of China and Australia for setting up regulation?
In Asia, not at all. I've been sitting here trying to think of someone who is not from China that I've spoken to, and I can't.
Why do you
think of
believe that's so?
anyone. Chinese people like to follow fashions, and I think it's just the current fashionable thing. I find in regulation you go through phases. So we went through the Cyprus broker phase. We've been through the British broker phase. We're just going through the Chinese broker phase. But happy to meet Vietnamese or Malaysians or anyone if they're here.
Is there any country that you can just advise our attendees that just is not worth dealing with in Asia just because?
Bhutan, maybe. Bhutan. I'm not sure if there's that many FX traders in Bhutan. Very nice place, though.
I'd like to take note. I was in Mongolia, excuse me, for a holiday, and I was shocked, actually, in Ulaanbaatar to stumble upon a Forex trading academy that was an IB for a broker that's not represented on this panel. And I went up there. I climbed the stairs of this dusty, old, communist-era building in Ulaanbaatar and talked to the guy. And he couldn't speak any English, but he busted out this Forex magazine that had been translated into Mongolian. And I thought to myself, you know, that's one of the great things about this industry is that the interest in it is as broad as the globe. And so I don't think there are any countries in Asia, except perhaps Bhutan and maybe East Timor, that you could rule out at this stage. I think that the market is as broad as the globe.
And for those companies out west that are looking to translate their guide, you know, their trading platforms into Mongolian and in various other languages, what are can you provide like pieces of advice that companies should be doing correctly or not, and what they shouldn't be doing incorrectly when they're moving out to Asia? We start with you, Adam.
Yeah, I think it's very hard to.
Actually,
just translate.
What's the worst thing you could do when you're making that plunge to start focusing on Asia?
I think it's very, very hard to just translate something and think that that's going to get you business. Yeah, I think that you do have to have some sort of local presence. You need to have local speakers who can speak to clients and so on. So I think that getting to know the market first is probably the fundamental thing. The same, there's a balancing act between having exactly the same model globally, and the other side of it is making it too local, so that your processes and your expenses go up too much. There's local regulations that you have to deal with, and there's local cultural things that may be different from country to country, but you also don't want to go too local because then it becomes very costly because your processes and your technology has to be developed accordingly. So there is a big balancing act, and I think you have to have people on the ground to be able to judge that balancing act.
And Shane, is there any instructions you're getting from New York that you're saying you can't do that over here?
Every day. No, I'm kidding. Frankly speaking, I think Gain Capital has done a nice job of striking that balance between having a global offer and localizing it for the clients we're looking to serve in Asia Pacific. So, long story short, no, that hasn't been a tension for me. But I would say I think the risk in coming to Asia is not doing that localization, not understanding the local markets, not maintaining an open dialogue with your clients and partners in the region.
Rajesh?
No, apart from the localization of the communication, people is important, people who really understand the market. But I think one of the big mistakes that Oanda certainly made, and I think most of the Forex brokers do, is regarding funding. And that's such a critical component of your proposition, that people just think that the funding options that work in UK and the US will just work in Asia, and that's just not true. And many brokers tend to forget that.
Sophie, what do you want to add?
I was just going to say it's an inverse problem that we're seeing, is that foreign brokers coming to Australia, going from their Chinese language site and then having their English language site, we're seeing some really poor English translations back to the AFSL site. So it's probably not the most cost-efficient thing to have your compliance person or your lawyer fix up your English, but we have to say to our clients, if ASIC looks at your website, they're going to think you're a bunch of clowns who can't even write English. So if they think you can't do your English website, what are they going to think about your compliance and your funding and your risk management? So that's certainly something that we push. Sorry, just to add, we have found that ASIC on the other side of the coin have some specialties now in reading Chinese and Asian languages, and have made comments to our clients about what their foreign language websites say. So you do need, so you're sure that it is compliant.
That's a good way of actually showing somebody else that this is how it looks like. This is how your Chinese looks like to the Chinese, the English language translated.
Got it. Yeah. Francis, what do you want?
Some point I want to add here. For the English website, they actually show they actually want the Chinese to read the English website. It's for the Chinese clients, because they can show their Chinese clients they have an English website. It doesn't for the local people. That'll be my guess. I mean, in terms of regional strategy, I think know your clients is very important. Even though we call Asia, but in Asia it's very complicated. It's over 50 countries here. So every client have their own appetite. Even the wire instruction is different. like some country like UnionPay, some place like NetTeller, some company like some area like credit card. So even that we have to separate different team, different payment gateway, different. You have to hire the right people to run the business for your local business.
And focusing back on China, I just want to get your thoughts on what is the main strategy as far as marketing there. Are you using Baidu, going direct with search? Are you looking for IPs? Is there one area of focus specifically that companies are doing there? What do you think, Arthur?
Well, just going back there, with your previous question, you're talking about. I completely agree with Adam that localization means a lot more than just translating your website. It means making sure that you have a local presence because, or especially in Greater China, clients demand now a local presence. They want you to be there. You can't just have your website translated and then have a couple local speaking reps based abroad. But that also means that you need to really dedicate yourself fully and commit yourself fully to this market if you want to enter this market, and that includes marketing and sales. It's not like you can just take the same marketing strategies that you had with global brokers wherever they were based and take that to Asia and think that that's going to translate into business overnight. You have to make sure that you understand the sales and marketing angles of Asia, and if you're trying to do business like in China, the whole industry has created this ecosystem around FX brokers, from technology providers to media to expos. And if you don't know the local market, you're a lot of times going to be taken advantage of. I get probably at least 1 or 2 emails a week about a new expo in China. And if you ever go to these expos, they're a lot of times completely empty and for lack of a better word, a waste of money. But I think a lot of these organizers prey on Western firms that are trying to enter China, and they're promising a big dream. So if you don't know the local market, if you don't know the marketing strategies that work well here, you're not going to succeed.
Adam, what marketing strategies do you believe are working well in China right now?
Well, we've since we opened our free trade zone office, we've been a lot more focused on developing partnerships in China with local banks and securities companies, and also with the fintech companies. I mean, the fintech companies in China are extremely innovative, and they're also doing a lot of development to focus on outbound investment into the international asset market. So, we're working more focused on finding those sorts of partners and discussing with those sorts of partners. But there's no shortage of them around. So, we're not actually having to spend a lot of money to find them.
Your focus is more relationship-based than, let's say, online advertising at this point.
Absolutely.
Okay. Rajesh, what do you?
No, we think that online advertising will take a long time for a late entrant like Oanda to really have its effectiveness. Just yesterday, I was sitting with a colleague and going through just searching for forex-related terms, and we were appearing nowhere in the search results. And we can obviously buy a lot of Baidu keywords and paid advertising, but that's not good. We have to be higher up in the organic listings, and that's only going to happen if we do some of the other things right. We genuinely believe that we want to invest a little bit in education and relationship management, and we think that there is an opportunity to be able to partner with some of the existing local players who really understand this industry very well, and then offer a forex or a CFD offering on top of that.
Shane, what's taking place in Gain Capital?
Well, I think Gain Capital is in a unique position in that we have a strong brand in China. I think in the absence of that strong brand, so again, going back to a startup broker in China, I think partnerships and local relationships are really critical. And even at the scale of Gain Capital, you never fully get away from that. I was having dinner last week with an important institutional partner of ours, in the mainland, and so I think building those relationships, whether those be IB partner relationships or whether those be individual client relationships, I think you never fully get away from that. So I would echo in some senses what Rajesh had to say about investing in education and building those relationships with our clients.
Let's open up right now to questions from the audience. Anyone has a question? So I'll ask another question. It seemed to be the bottom line was that everyone here is focusing on the relationship type of marketing and let the partners kind of decide whether they want to go online or not. There are a few companies out here doing with educational portals, Forex portals in China, in different other languages. Are even things like that you're investing money into the market, or seeing it as is it a branding play? Is it a effective place to acquire customers?
ADS do, because we are not a big brand like Gain Capital or Saxo. We are small brokerage firms and just entering China. So we actually spend a lot of time in China, like running around doing seminars, doing expo. And this kind of things, like in this year, we already scheduled at least 50 seminars, educational seminars, because China is huge. You can't just target Shanghai and Beijing. You have to target like secondary cities or the city you've never been there. So the easiest way to get the clients to your event will be through the educational seminar. That's why everybody is so crazy about educational seminars. That'll be the first FX 101 seminar for most of the new clients. And for the existing clients, because if you are trying to find the existing clients, it's very difficult because they either jump from FXCM to Gain Capital or jump to Saxo. For us, we'll be open the new markets, open the new area. Like talk to the people they never trade FX in their life. So that's why the education becomes very important tools.
With now so many equity traders in China more likely to be disenfranchised with what happened, is that going to be something that's going to move people away from trading in general, or do you see them now going into from your educational seminars being, we're interested in trading, but we're never going to do stocks again. Now we might go FX.
I think the equity trader is definitely great potential clients for us. And trading FX in China is really not investment, it's speculations. A lot of people trade gold, trade oil, trade FX. So doesn't matter they trade what kind of product they have, as long as you can provide the right product for the clients to trade. And with the technology nowadays, with the internet, for all the Chinese clients, they're very easy to access the market. So they just love that.
Yeah, I think, frankly speaking, as Chinese traders get more and more sophisticated, it will benefit those of us who are providing access to foreign markets, be those foreign equity markets or just foreign exchange trading, because I think a lot of people are disenchanted with the domestic equity markets. There is too much money going after too few quality equities onshore, and I think everyone recognizes that at this point.
Any questions? No. Okay, I'll ask one more and we'll finish with this. Another item that happened the past 12 months that was hitting the headlines was about taking place in both China and the rest of Asia of partnership scams. So usually instead of the broker scamming the client, there's situations where it's the customers or their partners, the affiliate scamming, where things are taking place, whether they're signing up people that don't actually trade and they're collecting the CPAs. And now with most of you focusing on that partnership type of business, I just want to get your feedback. Is that something you're also encountering? Starting with you, Adam.
No, not really. The people that we're focusing on partnerships with tend to be the regulated securities companies and banks, and so they're not really into the scam business. So it's not really what we've been encountering at all.
Arthur?
No, we haven't really experienced that either. I mean, we try to really make sure that we know who we onboard and who we partner with. We make a point to meet them face to face, understand their business, and that if there's any sense that there's any type of, not so credible business ethics going on, we try to steer clear from that.
Rajesh?
Are you talking about affiliate marketing fraud?
Yeah, more or less affiliate.
It's not anything specific to the forex industry at all. I mean, just yesterday's news article said that there's $7 billion of advertising money lost because of click fraud or affiliate marketing fraud. So I think it's not something that is specific to the forex industry. It's something that you have to be conscious about, something that you have to put pressure on your advertising agencies about, but nothing that is particularly unique. Anybody who's trying to acquire customers through the digital channel through a distribution model is likely to face that.
Okay, so you're saying it's part of the pitfalls of online businesses you're going to
It's
get.
something that you have to be conscious about. Yeah.
Okay. Shane?
Yeah, I'd echo that. I think that we've taken our lumps historically, but used that experience of having trouble with say affiliates or introducers to set the right rules and regulations internally, and so we don't see we just don't see a lot of those problems anymore. Frankly, obviously. The industry is filled with a mixed character set, I would say. So every now and then there is we have issues, but I think the right rules and guidelines are critical to maintaining those relationships on a healthy level.
I think not just you have to know your clients, you have to know your partner as well. You have to meet them face to face and know what's going on, what kind of business model they have. This is the positive part on this kind of relationship is when your client's having a trouble, your partner will be the first line to help you to solve the problem because they know their clients best. So we have to rely on the local partner heavily as well.
Anything you add on a legal side? No? Okay. Thank you very much for participating. Thank you much for watching, and please enjoy the rest of the show.
Thank you.
Thank you.